Good morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts, talking a little bit about why this is not 1920 and why valuations and returns actually do matter. Interesting article out from Ed Yardeni talking about this could be 1920 and that we could be in for a market melt-up now over the next several years because of the innovations of technology and things that were going on. Back in 1920 was when Henry Ford started manufacturing the Model T. We invented the bulldozer and we were doing all these type of things. And that's absolutely true. The innovation of technology was putting people to work and making them more productive. And we were bringing more people in from the agricultural society into urban centers, creating cities and getting companies to work and building companies and growing things and producing things that people needed. And that led to surging rates of economic growth and a stronger financial market. Today, though, technology is very different because we're using technology today to actually reduce the need for labor, to lower wage pressures, and to become more productive through the use of technology. Kiosk in restaurants, etc., right? Reduces the need for cashiers because now you can check yourself out at McDonald's. But when we look back at 1920 in particular, where Ed Yardeni is making the case, 1920 was the summit of what had happened after the previous 20 years. You had the 1907 crisis, you had two recessions, you had World War I, and then you had a depression in 1919, 1920 that led to price suppression in the market. Imagine 20 years of a market with negative rates of return, but that's where we were back in 1920, and that all led to a very sharp rise to 1929 that actually finally broke even 26 years later after the peak of the market in 1900. So again, 26 years just to get back to even from where you were in 1900. Today's a very different story, of course, with markets at all-time highs now. And of course, the real issue now becomes valuations. In 1920, valuations were trading at 5 times earnings versus basically 31 times earnings today. And what earnings tell us is really mostly about what your future return expectations are for stocks. And the higher those returns over time, the more important they are. But what valuations also tell you is what's happening in the economy. During the Great Depression, economic growth was running at 9 and 10% on an annualized basis because even though we were in a depression, people were working, manufacturing, producing, creating economic growth. Today, we're currently running at basically zero economic growth rates, but growth rates have been right around 2% up to this point, and they're likely to be about 1.5 to 1.75% coming out of the recession that we're in now. But importantly, what valuations tell you, as I said, is that when you look at where valuations are versus future returns, both on a 10-year basis and a 20-year basis, they are suggesting that forward returns on stocks should be somewhere around 2 to 3%. And that is historically accurate to what previous periods in time have said that forward returns will be from valuations over the course of history. And again, if we take a look at this back in 1920, valuations, again, extremely suppressed. And you take a look at 5-year forward returns, 5-year, just what's happening in the next 5 years. Returns are very correlated to where valuations are. And currently at 31 times earnings, forward 5-year returns are closer to zero than they are being what was correlated back to 1920 to 1929. So as we again talk about these things, the most important thing to remember is that what's been happening in the markets over the course of the last 5 years is the stock market is not representative of what's happening in the economy. Stocks are up 134%, GDP is about 37%, and corporate sales are 11%. So again, there's not been a translation and a correlation between what's happening in stocks, which are being driven by liquidity, rather than being driven by economic growth, which is where earnings and sales come from for companies. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. Get by the website, realinvestmentadvice.com.